everybody. It's Ian Beamer, Guaranteed Rate. Hope everybody's doing well. Happy March. A lot going on in the world. We've got spring training starting for Major League Baseball. We've got the World Baseball Classic. And this weekend, we've got March Madness kicking off. But in the world of finance, real estate, banking, headlines have been the Silicon Valley Bank in last week and this week the Credit Suisse Bank. So apparently they're not doing well. Silicon Valley Bank is no more, and it sounds like a lot of their issues have a lot to do with the rapidly rising interest rates. So we're still waiting on reports, and there'll be a thorough investigation. We'll figure out exactly what happened, but it sounds like at least this was partly due to the fact that, at least in the case of Silicon Valley Bank, they had a massive influx of deposits in 2020, 2021 during the pandemic. As a result, they had to invest that money. They looked at solid, secure investments, safe investments, mortgage-backed securities, U.S. Treasury bonds, which are great. Sound investments, fantastic. They did the right thing. However, they purchased those investments. They invested that money long term when interest rates were very, very low. And interest rates were somewhere around 3. Well, as a result, a couple of years later, interest rates are now mid-6s. And those assets that they had purchased 24 months ago, 18 months ago, are now worth significantly less. And in one report I saw, and again, we're still waiting to see exactly what happened, but one report I saw in terms of Silicon Valley Bank was that their assets had been devalued by a little over $17 billion. So if you think about this, if you have $100 that you invested and you're getting a return of 3%, and some time goes by and the market rate for that same investment is now 6.5%, if you need to liquidate that investment and sell that investment to another investor, well, that investor has 6.5% available through other channels on the same exact investment. So in order to get that investor to purchase your asset at 3%, you're going to have to sell your asset for something less than $100. So that's basically what happened with Silicon Valley Bank. And then I think they were trying to make up some ground. They made some other investments that were a little bit riskier, had a little bit higher return, and it didn't work out real well. So in other news, inflation numbers, consumer price index numbers came in. Inflation is slowing somewhat. We are down to 6%, and the leading inflationary numbers were, I believe it was energy, food, and housing, shelter. So rent prices are going up, home values are going up. Number one reason home values are going up is because of a lack of inventory. So we're seeing this nationally, where this is not a secret. I feel like a broken record saying this every month, but there is a lack of inventory and has been for probably 18, 24 months, maybe even 36 months. So really since the pandemic. And if you look at the chart below, it shows the listings nationally, the 3 years pre-pandemic, and then the 3 years, 2020, 2021, and 2022. And we're about half. We've got about half the listings that we had pre-pandemic. Demand is still strong, if not even stronger than it was in the past, and thus home prices keep going up. There is a home shortage nationally. We've discussed this on past videos as well. After the collapse in 2008, 2009, home builders had cut way down on permits on building new homes. So last year we did come back and had our strongest production year in about 15 years. We produced about 1.4 million homes nationally, which is about what we need if there was no shortage. We need about 1.4, 1.5 million homes a year produced just to keep supply and demand even. So in order to make up a deficit and trying to figure out how short we are depends who you ask. So somewhere between 1.6 million homes and 5.24 million homes nationally. So if we're producing 1.4 million homes a year, and we need to produce 1.4 to 1.5, that means we've got to add on conservatively 300,000 homes per year for the next 5 years just to get even. So this is not an issue that's going to go away anytime soon. So I think values will continue to climb for the next several years, possibly even a decade. This is not a problem that's going to be fixed or remedied overnight. So we'll keep an eye on that. Hopefully we start to see at least some builders build a little more. I know Lennar National Builders just reported record profits. That was yesterday or the day before. Home builders are doing very, very, very well. The bottom lines are strong. They're making some money. That's a good sign. We want them to keep making money. We want them to keep building houses. We just wish they'd possibly pick up the pace at least slightly. Lastly, I'm going to leave you guys with a request. I'm going to ask a favor of you, for those of you in the Chicagoland area, especially those of you in the suburban Chicagoland area. The Daily Herald is doing its Reader's Choice Awards for 2023, and I'd ask you to please take a minute, take no more than 90 seconds to nominate me for Mortgage Banker of the Year. Just the nomination is all I ask. If you could click on that link, there's instructions there. I'd really appreciate it. Please let me know what questions you guys have regarding any of the topics I've discussed this week. I wish you happy shopping. Wish you well, and I look forward to hearing back from you soon. Have a great day. Thanks so much for checking out my email, checking out my video. We'll talk. Bye-bye.